Imagine harnessing the power of two potent ETFs to create the ultimate portfolio. This isn't a dream, but a reality with SCHD and SCHG. Welcome to the captivating world of exchange-traded funds, or ETFs as they're commonly known. For those who may not be aware, ETFs are a type of investment fund and exchange-traded product traded on various stock exchanges. They offer you the benefits of diversification, that is, the ability to invest in a broad array of securities in one go. This diversification can help spread risk and potentially enhance returns. Let's zero in on two particularly popular ETFs, SCHD and SCHG. SCHD, or Schwab US Dividend Equity ETF, is a fund that tracks a dividend yield-weighted index of 100 US stocks. It's designed for investors looking for income and who believe in the power of dividends. What sets SCHD apart? It emphasizes companies with a record of consistently paying dividends. Hence, it's a fantastic way to generate regular income while also participating in the potential upside of stock investments. On the other hand, we have SCHG, the Schwab US Large Cap Growth ETF. As the name suggests, this ETF focuses on large cap companies in the United States that exhibit strong growth characteristics. These are companies that are expected to grow at an above-average rate compared to other market stocks. SCHG offers exposure to these high-growth potentials, providing an opportunity for significant capital appreciation. Each of these ETFs brings something unique to the table. SCHD, with its focus on dividends, offers the promise of steady income. SCHG, with its emphasis on growth, provides the potential for impressive capital gains. Put them together, and you have a balanced blend of income and growth, a combination that many investors dream of achieving. If you're intrigued, you're in the right place. We're diving deep into the world of SCHD and SCHG, exploring their synergy for an unbeatable portfolio. Stay tuned as we unravel the power these two ETFs can bring to your investment strategy. Hello viewers, if you are enjoying this content and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. Let's kick things off with SCHD, the dividend powerhouse that's a favorite among income-focused investors. What makes SCHD so special? Well, it's all in its strategy and portfolio composition. SCHD, or Schwab US Dividend Equity ETF, is a fund that seeks to track the performance of the Dow Jones US Dividend 100 Index. This index is composed of high dividend-yielding US companies. So, when you invest in SCHD, you're essentially investing in a collection of profitable, dividend-paying companies. But it's not just about the high dividends. SCHD is known for its stability. The fund's portfolio is made up of established companies that have a consistent record of paying dividends. These are companies that have weathered various economic storms and have proven their resilience over time. Now, let's talk numbers. Historically, SCHD has delivered a high dividend yield. In fact, it's one of the highest in its category. That's why it's a favorite among income-focused investors. They love the steady stream of income that comes from owning a piece of these dividend-paying companies. But dividends are just one part of the equation. Don't forget about the potential for capital appreciation. Yes, the companies in SCHD's portfolio are mature and stable, but that doesn't mean they can't grow. On the contrary, these companies have a proven track record of growth, which can lead to a rise in the value of your investment over time. So, if you're an investor who likes the idea of regular income with the potential for growth, SCHD might just be the ticket. It's like having your cake and eating it too. And who doesn't love that? SCHD is a king in its own right. But what happens when we pair it with another royal, SCHG? Well, that's a story for our next scene. Stay tuned, you won't want to miss it. Now meet SCHG, the growth giant that's a darling of investors seeking capital appreciation. With an investment strategy that leans heavily towards large-cap growth stocks, SCHG is a powerhouse when it comes to potential for capital appreciation. Think of SCHG as the hare in the classic tale of the tortoise and the hare. It's all about speed, growth, and the exhilarating chase for higher returns. While the tortoise, or in our case SCHD, steadily accumulates dividends, our hare, SCHG, leaps ahead with the potential for rapid capital appreciation. This ETF's portfolio composition is like a who's who of the growth stock world. It's packed with companies that are industry leaders, innovators, and trailblazers. These are businesses that have the potential to reinvent their industries and, in doing so, deliver outsized returns for their shareholders. But it's not just about the promise of tomorrow. SCHG has a track record that speaks volumes. Over the past decade, it has consistently outperformed the broader market, proving that its growth-focused strategy can deliver the goods. Why is SCHG such a favorite among growth-focused investors? Well, it's simple, really. Growth investing is all about buying stocks that are expected to increase in value over time. And SCHG offers a simple, efficient, and effective way to gain exposure to a wide array of these high-growth prospects. Moreover, SCHG's focus on large-cap stocks provides a degree of stability that can be comforting in volatile markets. These are established companies with proven business models, and while they may not offer the same sky-high potential returns as some small-cap growth stocks, they also don't carry the same level of risk. So there you have it. SCHG is a growth-focused juggernaut, a titan of capital appreciation, and a key player in our ultimate portfolio strategy. But remember, our tortoise hasn't been left in the dust. SCHG is a giant in the realm of growth, but the real magic happens when we bring SCHD and SCHG together. Now, the moment you've been waiting for. What happens when we combine SCHD, the Dividend Powerhouse, and SCHG, the growth giant? Imagine having a portfolio that doesn't force you to choose between income and growth. A portfolio that offers you the best of both worlds. This is what you get when you combine SCHD and SCHG. SCHD offers you a stable income and SCHG offers you the potential for high growth. When you blend these two, you create a portfolio that is balanced. It's a bit like having your cake and eating it too. You get the steady income from the dividends of SCHD and the potential for capital appreciation from the growth-focused SCHG. This balance can be particularly beneficial in volatile markets, as the income from dividends can help cushion any potential downturns. But there's more to this combination than just balance. There's also the potential for enhanced returns. By investing in both SCHD and SCHG, you are diversifying your portfolio across different sectors and investment styles. This diversification can lower your risk and potentially boost your returns. But how do you determine the right balance of SCHD and SCHG for your needs? Well, that depends on your individual circumstances, your financial goals, your risk tolerance, and your investment timeline. If you're a younger investor with a higher risk tolerance and a longer investment timeline, you might lean more towards SCHG. If you're a more conservative investor looking for stable income, you might lean more towards SCHD. Remember, investing is not a one-size-fits-all proposition. It's about finding the right fit for you. And the combination of SCHD and SCHG offers you the flexibility to tailor your portfolio to your unique needs. The combination of SCHD and SCHG is a potent one, providing balance, potential, and power. But we're not done yet. You're now armed with the secret of the ultimate portfolio. But how can you maximize the power of SCHD and SCHG? Well, the first step is regular portfolio reviews. This isn't just a set-it-and-forget-it game. By keeping an eye on your assets, you ensure they're still fulfilling their roles in your portfolio. Next, rebalancing. It's essential to maintain the balance between these two funds to leverage both growth and dividends. Don't hesitate to adjust based on market conditions and your financial goals. Staying informed is another key aspect. Keep up with market trends, financial news, and changes in the ETFs themselves. Knowledge is power in the investment world. But remember, patience is a virtue in investing. The real power of combining SCHD and SCHG comes with long-term investing. Dividend reinvestments, compound interest, and growth all need time to work their magic. With these strategies, you can unlock the full potential of your SCHD and SCHG portfolio. Trust the process and let your investments do the heavy lifting. So, there you have it, the power pair of SCHD and SCHG and the ultimate portfolio. We've journeyed through the dividend powerhouse that is SCHD and the growth giant SCHG. We've seen how, when combined, they form a potent mix of income and growth potential. We've also delved into the secret of maximizing this combination, creating an investment strategy that is as dynamic as the markets themselves. But remember, this is just a starting point. We encourage you to do your own research, consider your own investment goals, and always take into account your personal risk tolerance. Investing is not a one-size-fits-all endeavor, and what works for one may not work for another. Use these insights as a springboard to dive deeper into the world of investing. If you found this content valuable, don't forget to subscribe, like, and share. Stay tuned for more insights to power your investment journey.